What if the way you're cutting property expenses is actually hurting your NOI more than helping it? Most value-add plans fail because someone tried to save money rather than invest where it matters. Welcome to Strategy Saturday. I'm Charles Carillo, and today we're talking about how to optimize your NOI with smart, strategic cost cutting without lowering the quality your tenants depend on. So let's get started. Optimizing net operating income, NOI, in multifamily real estate is a delicate balance of increasing revenue and reducing operating expenses without compromising the quality that drives tenant satisfaction and retention. There's always a red flag when I review a multifamily investor's underwriting and I see a significant expense reduction from the previous owner. Now, for a value add plan to work, it requires an infusion of capital, not an extraction of capital. Now, with that being said, there are some expenses that can be reduced, and that is what we are discussing today. So the first one would be utility and energy efficiency. So install LED lighting in common areas and utilize dusk to dawn sensors. Dusk to dawn sensors will cost money to install. Mainly, it's all the wiring and the labor that goes with it. The sensors alone are very inexpensive. And you connect that to your outdoor and indoor common areas, but that is a one-time cost, and the savings will start immediately. I always install more lighting when I purchase a property, and I've never had a tenant complain about too much lighting. The second part of this is low flow water fixtures. So if the landlord is paying for water, install low flow fixtures, and this includes faucets, toilets, and shower heads. This is great for smaller complexes, I feel, and if you don't want to pay for submetering. The best way of doing this is submetering. Now, if the landlord is paying for water, the best solution is submetering. It costs money and it takes years to fully implement depending on the size of your property because as leases renew and tenants move, but it will decrease your water bill, a cost that keeps increasing. And it keeps increasing because your town, your municipality is going to keep on increasing what the cost is for water. And now you have to now pass that off to your tenants on the next time that they're rebilling. If you're doing some sort of like RUBS, a ratio utility billing system, back to your tenants. So that's one thing that you're always playing catch up. With the submetering, it's a one-time way of it, just you push it all off. And once the submetering is complete, you have your new tenants cover their water bills. And instead of directly raising your rents, and you can renew your current tenants at their current lease rate while having them start paying for their water, which is a great way of getting that off your books, telling them you're not raising rent, you're just having them take care of paying for their water. It's easier to do this on new rentals, but you could do this if you have some seasoned tenants and you don't raise their rent, have them start paying for their water. The next one is property management and vendors. So it is customary for investors to change property managers when a property changes hands. I don't remember one time when this hasn't happened that we've purchased a property, especially if there were management issues affecting the property's performance, which usually happens because if you're buying properties with under market rents, then what happens is that the owner, previous owner, and the current management, they got very complacent with just keeping everything running smoothly and not really maximizing or getting the most they could out of the property. So hiring a property manager is not entirely done on pricing. Additionally, when you are reviewing pricing, you need to compare all pricing, not just the percentage that's charged. And it's important to thoroughly review property managers before hiring them because changing property managers is very difficult and very time consuming. It's a huge hassle going back with all the tenants, going back with all the vendors, making sure everything's caught up. You have to now educate this person on everything that's happening in this property because your previous property manager is not going to do it. And paying more for a property management company does not always yield better management. We purchased a 22-unit property years ago to add to a portfolio of properties we had in this neighborhood, and the owner had hired his ex-son-in-law to manage the property, and he charged the owner a 15% management fee. Now, our manager, who was doing a much better job at our other properties, was charging us, I think it was like 3.75 or 4%. So a dramatic discount, and it was a much better service. Now, vendor contracts should be reviewed before you purchase a property to see what the terms of the contract are and if they hold over to the new owner. A lot of them do. So furthermore, when you are hiring a property manager, ask them about the abilities of their service techs and what vendors they will call, for instance, if a plumbing or electrical problem is above their abilities, and having a property management company with knowledge and knowledgeable techs who can, snake drains, snake mains, replace fixtures, fix fix simple HVAC problems, etc., will save you a lot of money. It is a difference between paying $250 versus $50 for a simple service call. The next part of this is proactive maintenance, and this is something that value-add investors don't really like doing because it really cuts into their profits, and people that are flipping houses, the same thing. But if you're a long-term investor, simply put, fix things correctly before they become a major problem. Not only will this eliminate property owner hassles with this problem in the future, but it will also stop your tenants from being hassled by constant patching. About 10 years ago, my wife and I rented an apartment, and the central AC consistently had issues. It was a great unit, it was waterfront, we were on the corner of this building, but the property managers were called several times about the issue, and it was just a patch that lasted 2 to 3 weeks, and they would need to call them again. It's great, but it's one of the things that we ended up leaving was because the AC was a major problem. Administrative efficiencies. So leveraging technology is a great step for multifamily investors, even if they are just starting out. And this is something we'll see when you're buying properties with like mom and pop properties that have been owned for decades. If they're doing the property management or if they have a property management company, this is something, the technology is usually where they're really lacking, right? These people are still sending in checks. They're like calling some guy off site to fix something and no one else knows what's going on. So property management software allows you really to automate administrative tasks like rent collection, payment reminders, lease renewal alerts, lease document signing, maintenance requests, which is a huge one. So your whole team is on the same page, and it makes it easier to kind of route the issue to the appropriate person. Great, especially if multiple people are involved with your properties. You can route requests really to the right person to handle that specific issue. Now, going paperless and switching to digital communications for notices, reminders, billing, and work orders will also make management much more streamlined for you and your tenants. Now, optimizing the NOI in multifamily real estate starts with strategic cost-cutting measures that enhance efficiency without diminishing the resident experience. If you want to learn more about maximizing property cash flow by reducing certain expenses, check out episode SS87. That's episode SS87. So I hope you enjoyed. Please remember to rate, review, subscribe, submit comments and potential show topics at globalinvestorspodcast.com. If you're interested in actively investing in real estate, please check out our courses and mentoring programs at syndicationsuperstars.com. That is syndicationsuperstars.com. Look for 2 episodes next week. See you then.
Have you always wanted to invest in real estate, but didn't have the time, didn't know where to find the deals, couldn't get the funding, and didn't want tenants calling you? Since 2006, I've been buying income-producing properties in great locations that provide us with consistent passive income while we wait for appreciation in the future and take advantage of tax laws while we're waiting. And unlike your financial advisor, we invest alongside our investors in every property we purchase. Check out investwithharborside.com. If you like the idea of investing in real estate, if you like the idea of passive income, partner with us at investwithharborside.com. That's investwithharborside.com.
Nothing in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure, subscription documentation, and are subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Syndication Superstars, LLC exclusively.